There's a number shaping almost every financial decision you'll ever make. It decides whether you get approved for a home loan, what interest rate you pay on your car, and in some cases, whether a landlord even lets you rent their property. Most Australians have no idea where they stand, and the gap between a good score and a bad one can cost you tens of thousands of dollars over your lifetime. Today, we're walking through every credit score level in Australia, from rock bottom all the way to the top, and I'm going to show you exactly what life looks like at each stage. Let's start with how credit scores actually work here. As of April 2026, Australia has two main credit reporting bodies, Equifax and Experian. We used to have three, but Experian completed its $820 million acquisition of Ilion in late 2024. And from the 1st of April 2026, those two now operate as a single bureau. So if you had an Ilion credit file before, that data has now been folded into your Experian report. It's worth checking that everything transferred correctly. Each bureau uses a different scoring range. Equifax scores go from 0 to 1,200. Experian scores go from 0 to 1,000. Your Equifax score might be 720 while your Experian score sits at 650 for the exact same credit history because the algorithms are different. Let's start at the bottom. A below average credit score. On Equifax, that's anything under 460. On Experian, below 300. Life at this level is rough. You've likely had defaults, missed repayments, maybe a bankruptcy or court judgment on your file. Lenders see you as high risk. Most major banks will flat out reject your application for a personal loan, a credit card, or a home loan. If you do find a lender willing to work with you, expect interest rates that are punishing. We're talking personal loan rates as high as 19 to 25% per annum. Compare that to someone with a great score who might pay 6 or 7%. On a $30,000 loan over 5 years, that difference in interest rate alone could cost you more than $15,000 extra. But it gets worse. Many landlords and real estate agents now run credit checks on rental applicants through services like Equifax's National Tenancy Database. If your report shows defaults or unpaid debts, you could get knocked back for a rental property even if you earn enough to afford it. And since June 2025, buy now, pay later services like Afterpay and Zip are regulated under the same credit laws as traditional lending. That means missed BNPL payments now show up on your credit file and can drag your score down even further. At this level, you're essentially locked out of the financial system. You're paying more for everything, getting rejected often, and stuck in a cycle where it feels impossible to get ahead. Now let's move up to a fair or average credit score. On Equifax, that's roughly 460 to 660. On Experian, 300 to 499. Life here is better, but it's not great. You can get approved for some loans, but your options are limited. The major banks might still say no, or they'll offer you a higher interest rate than someone with a stronger profile. A personal loan with an average score might come in around 12% per annum. That same loan for someone with an excellent score could be under 7%. You'll also have less negotiating power. Lenders set their terms and you basically take what you can get. At this level, you can function financially, but you're paying a premium for the privilege. Next up is a good credit score. On Equifax, that's 661 to 734. On Experian, 500 to 699. Now things start to open up. Most lenders will approve you. You'll get access to competitive interest rates, though probably not the absolute best ones. A good credit score tells lenders you've been managing your repayments consistently. No major defaults, no court judgments, and a solid repayment history. And this is where comprehensive credit reporting really matters. Under CCR, your credit file now includes the last 24 months of repayment behavior across all your accounts: home loans, credit cards, personal loans, car finance, and since June 2025, buy now, pay later. Every on-time payment builds a positive marker. Every missed payment creates a negative one. The system now rewards responsible behavior, not just the absence of disasters. At this level, you're in a comfortable position. You can get approved for a car loan at a reasonable rate, qualify for decent credit cards, and most landlords will have no issues with your application. Now we step into very good territory. On Equifax, that's 735 to 852. On Experian, 700 to 799. This is where life gets noticeably easier. Lenders want your business. You're seen as a reliable borrower, and that opens the door to better rates, higher credit limits, and more flexible terms. If you're applying for a home loan, you'll likely qualify with multiple lenders, which gives you the power to shop around and negotiate. And that's a huge advantage because even shaving 0.2% off your home loan rate on a $600,000 mortgage saves you roughly $25,000 over the life of the loan. At this level, you've probably been paying all your bills on time for years. You keep your credit utilization low, meaning you don't max out your credit cards. You don't apply for new credit every few months. And you've built a stable financial track record. This is the sweet spot where your credit score actively saves you money. And then there's the top tier, an excellent credit score. On Equifax, 853 to 1,200. On Experian, 800 to 1,000. Here's the interesting part. The national average Equifax credit score, according to their December 2025 scorecard, is 864. That actually sits inside the excellent range. But averages can be misleading. People aged 18 to 30 average around 715, while those aged 61 to 70 average 935. Women hold a higher average at 895, compared to men at 882. Your score tends to improve naturally as you age, simply because your credit history gets longer and more established. At this level, you're in the strongest possible position. Lenders offer their best rates. Your applications get processed faster. You have full freedom to choose the financial products that suit your goals. The irony is, people at this level often don't need to borrow at all. They've built strong financial habits, they live within their means, and they've let time do the heavy lifting. So what actually moves your credit score up or down? Paying your bills and loan repayments on time is the single biggest factor. Defaults and missed payments are the most damaging. The number of credit applications you make matters because each one creates a hard inquiry on your file. Your credit utilization ratio plays a role, and the length of your credit history counts too. Credit inquiries stay on your file for 5 years. Defaults stay for 5 years. Serious credit infringements can remain for up to 7 years. And under comprehensive credit reporting, your repayment history, both good and bad, is visible on a rolling 24-month window. Here's what I want you to take away from this. Your credit score isn't just an abstract number. It's a real, tangible filter that either opens doors or closes them. The difference between a below average and an excellent score can literally mean hundreds of thousands of dollars over your lifetime in extra interest, lost opportunities, and financial stress. The good news is, no matter where you are right now, you can improve it. Check your score for free through Equifax or Experian. Review your credit report for errors, especially now that Experian and Ilion have merged, because older Ilion data may have carried across, and it's worth making sure everything is accurate. Pay every bill on time, even the small ones. Keep your credit card balances low, and stop applying for credit you don't need. Your credit score is one of the most powerful tools in your financial life. Start treating it like one. If this video helped you understand where you stand, hit that subscribe button and turn on notifications. Thanks for watching, and I'll see you in the next one.